We've seen this pattern 3 times before: 1973, 1979, 2008. It's happening again in 2026. History repeats. Every time oil prices spike, the same economic consequences follow. Inflation accelerates, interest rates spike, stock markets crash, real estate values fall, job losses happen. In this video, I show you the exact pattern that's about to repeat and what you need to do right now to protect yourself. See, most people think about oil prices in terms of what they pay at the gas pump. Gas is getting more expensive, so they complain about it, and then they move on. But that's a massive oversimplification of what's actually going to happen. When oil prices spike in 2026, it's not just going to affect gas prices. It's going to affect everything. It's going to affect your grocery bills. It's going to affect your electricity costs. It's going to affect the prices of the things you buy. It's going to affect your job security. It's going to affect the value of your investments. It's going to affect your retirement plans. And if you're not prepared for it, if you don't understand what's coming, you're going to get hit hard. My name is Clarence, and I spend way too much time thinking about economic trends and what's coming down the pipeline. Don't forget, like this video and subscribe to the channel. I look at the data. I look at what's happening in the Middle East. I look at supply and demand dynamics. I look at what central banks are doing. And everything is pointing toward oil prices being significantly higher in 2026 than they are today. And when oil prices spike, there's a predictable series of consequences that follow. These consequences are not random. They're not accidents. They're the natural result of how our economy works. And understanding what those consequences are going to be is absolutely critical if you want to protect yourself and your family from financial harm. Let's start with the first horrible consequence that's coming in 2026 due to rising oil prices, and that's inflation on basic necessities. When oil prices spike, the cost of producing and transporting food goes up. Farmers have to pay more for diesel fuel to run their equipment. Food processing plants have to pay more for energy. Trucking companies have to pay more for fuel. All of these increased costs get passed on to you in the form of higher prices at the grocery store. You're going to go to the grocery store, and the price of milk is going to be 50% higher than it is today. The price of bread is going to be 50% higher. The price of chicken and beef is going to be significantly higher. Your grocery bills, which are probably already straining your budget, are going to become absolutely unmanageable. And here's the really insidious part. Your wages are not going to increase at the same rate that prices increase. So you're effectively getting a pay cut while your costs are going up. That's a double squeeze, and it's going to hurt. The second horrible consequence is going to be utilities costs skyrocketing. Your electricity bill, your gas bill, your water bill, all of these are going to go up significantly when oil prices spike. Some of this is direct. If you heat your home with heating oil or natural gas, your heating bill is going to go up dramatically. But a lot of it is indirect. Electricity is generated using fossil fuels in many parts of the country. So when fossil fuel prices go up, electricity prices go up. Your utility bills, which are already a significant part of your monthly budget, are going to become a much bigger burden. You're probably spending $200 to $300 per month on utilities right now. In 2026, after oil prices spike, you could easily be spending $400 to $500 per month. That's an extra $100 to $200 per month that's going to come out of your budget. The third horrible consequence is transportation costs are going to become astronomical. Gas prices are going to spike. We're probably looking at $6 to $8 per gallon gas, maybe even higher in some parts of the country. If you've got a long commute, if you've got to drive to work, your gas bill is going to become unmanageable. But it's not just gas. It's everything related to transportation. Airlines are going to raise ticket prices because jet fuel is expensive. Shipping companies are going to raise rates because fuel is expensive. Public transportation is going to raise fares because operating costs have gone up. So whether you drive, fly, or take the bus, transportation costs are going to become a much bigger part of your budget in 2026. The fourth horrible consequence is job losses and economic slowdown. When oil prices spike, businesses start laying off workers. The reason is that higher energy costs reduce profit margins. Companies have to choose between raising prices, which makes them less competitive, or reducing costs, which often means laying off workers. So unemployment is going to increase in 2026. And if you're in your 40s or 50s, if you're closer to retirement, if you've got a specialized skill set that might not transfer to other industries, you're at higher risk of job loss. Even if you don't lose your job, your employer might freeze wages or reduce benefits to deal with the higher costs. So your financial security is going to be threatened from multiple directions. The fifth horrible consequence is inflation spiraling out of control. When oil prices spike and basic necessities become more expensive and transportation becomes more expensive, inflation starts to accelerate. And once inflation starts accelerating, it becomes self-reinforcing. Workers demand higher wages to keep up with inflation. Employers have to pay higher wages. Higher wages increase costs. Higher costs lead to higher prices. Higher prices lead to more inflation. It's a vicious cycle, and once you get into that cycle, it's really hard to get out of it. The Federal Reserve has to raise interest rates to try to control inflation, which brings us to the next consequence. The sixth horrible consequence is that interest rates are going to spike. When inflation is rising, the Federal Reserve has to raise interest rates to try to control it. Higher interest rates make borrowing more expensive. If you've got variable rate debt, your payments are going to go up. If you're thinking about buying a house or refinancing your mortgage, the interest rate you get is going to be significantly higher. Credit card interest rates are going to go up. Student loan interest rates are going to go up. Business loan interest rates are going to go up. This is going to make it much more expensive for people to borrow money, which is going to slow down economic activity and create financial stress for anyone who's carrying debt. The seventh horrible consequence is stock market volatility and potential crash. When oil prices spike and inflation rises and interest rates go up, the stock market tends to decline. Companies' profit margins get squeezed. Economic growth slows down. Investors get scared. Stock prices fall. If you've got retirement savings invested in the stock market, you're going to see the value of your portfolio decline. And if you're close to retirement, if you're going to need to start withdrawing from your investments, a stock market crash in 2026 could be absolutely devastating to your retirement plans. You could be forced to sell stocks at the worst possible time, locking in losses and reducing the amount of money you'll have for retirement. The eighth horrible consequence is real estate market stress and potential decline. When oil prices spike and interest rates go up and inflation accelerates, real estate becomes less affordable. People can't afford to buy houses anymore. Demand for housing falls. Housing prices decline. If you own a house and the value of your house goes down, your net worth is going to decline. If you were planning to downsize or move in 2026 or 2027, you might find that your house is worth significantly less than you thought it would be. And if you were planning to tap into your home equity for retirement or other financial needs, that equity could evaporate. The ninth horrible consequence is supply chain disruptions and product shortages. When oil prices spike, transportation becomes very expensive. Shipping goods becomes very expensive. Companies start to limit what they're shipping. Supply chains break down. You start to see shortages of certain products. Some products become unavailable. The prices of available products spike. This creates a situation where you can't buy what you want, or if you can buy it, it's extremely expensive. We saw this during the pandemic. We saw supply chain disruptions. Imagine that happening again in 2026 due to oil prices. Except this time, it's going to be more widespread and longer lasting, because it's not a temporary pandemic disruption. It's a fundamental economic response to high energy costs. The 10th horrible consequence is social and political instability. When people's financial lives are being squeezed by rising prices, higher taxes, job losses, and declining asset values, social tensions rise. People get angry. They blame the government. They blame big companies. They blame immigrants. They blame whoever they think is responsible. Social movements start. Protests happen. Political extremism rises. Violence increases. This creates an environment of uncertainty and instability that makes it even harder to do business and make sound financial decisions. And if you're someone who's approaching retirement, if you're someone who's concerned about your financial security, social and political instability is the last thing you need. Now, here's the thing that's important to understand about all of these consequences. They follow a pattern that we've seen before. Every time oil prices spike, these same consequences happen. We saw them in 1973, when oil prices spiked due to the OPEC embargo. We saw them in 1979, when oil prices spiked again. We saw them in 2008, when oil prices spiked right before the financial crisis. We're going to see them again in 2026, when oil prices spike due to supply constraints and geopolitical tensions. The question is not whether these consequences are going to happen. The question is whether you're going to be prepared for them. So, what should you actually do to prepare for these consequences? Well, first of all, you need to understand what's coming. You need to understand that oil prices are likely to spike in 2026. You need to understand the consequences that are going to follow. You need to understand how these consequences are going to affect your personal financial situation. Once you understand that, you can start making strategic decisions to protect yourself. The first thing you should do is reduce your debt. When interest rates spike, debt becomes much more expensive. If you've got variable rate debt, you're going to be paying much more. If you've got a lot of debt, you're going to be in a precarious financial position. So start paying down your debt now, while interest rates are still relatively low. Get rid of credit card debt. Get rid of high-interest loans. Pay off as much as you can before 2026. The second thing you should do is build up your emergency fund. When economic chaos happens, when jobs are being lost, when prices are spiking, you need to have cash on hand to cover your expenses. Your emergency fund should cover at least 6 months of living expenses, preferably a year. Start building that now. Every dollar you can set aside as an emergency fund is a dollar that's going to protect you when things get difficult in 2026. The third thing you should do is diversify your investments. Don't have all your money in the stock market. Don't have all your money in bonds. Have a diversified portfolio that includes stocks, bonds, real estate, commodities, and cash. This way, when one asset class is declining, other asset classes are holding up or going up. Diversification doesn't prevent losses, but it does reduce them, and it gives you some protection. The fourth thing you should do is position your portfolio to benefit from rising oil prices. As I mentioned in my previous video, when oil prices spike, energy stocks tend to do well. Agricultural stocks tend to do well. Real estate tends to do well. So make sure you have some allocation to assets that perform well when oil prices rise and inflation accelerates. This won't make you rich, but it will provide some protection during a crisis. The fifth thing you should do is think about your income and your career. If you're in an industry that's going to be hit hard by rising oil prices, you might want to think about transitioning to a different industry. If you're in a job where you're expendable, you might want to think about developing skills that make you more valuable. If you're in a job where you have some flexibility, you might want to think about negotiating remote work so you can reduce your transportation costs. Your income is going to be critical in 2026. You want to make sure that you're in a position where your income is relatively secure and where you have some ability to adapt if things change. The sixth thing you should do is think about your housing situation. If you're in a house that's too expensive, if you're in an area with high property taxes, if you're in a situation where your housing costs are consuming a large percentage of your income, you might want to think about downsizing or moving to a less expensive area while you still have the option to do so. Your housing is probably your biggest monthly expense. If you can reduce that expense, you're going to have much more flexibility to handle the other financial challenges that are coming in 2026. The seventh thing you should do is make sure your insurance is adequate. When economic chaos happens, you want to make sure you're protected. Make sure you have adequate health insurance. Make sure you have adequate life insurance if you've got dependents. Make sure you have adequate auto insurance. Make sure you have adequate homeowners or renters insurance. You don't want to be dealing with uninsured losses on top of everything else that's happening. The eighth thing you should do is educate yourself about what's coming. Read about energy markets. Read about geopolitics. Read about inflation. Understand how these things work. The more you understand, the better decisions you're going to make. And the better decisions you make, the better off you're going to be when 2026 arrives and oil prices spike. The ninth thing you should do is create multiple income streams. Your primary job is not going to be enough to sustain you if the economy is in chaos in 2026. You need to have other sources of income. Start a side business. Freelance in your field. Create content on YouTube or other platforms. Invest in rental properties. Do whatever you can to create additional streams of income. The more income sources you have, the more resilient you're going to be to job loss or income reduction. The 10th thing you should do is start now. Don't wait for oil prices to spike. Don't wait for the crisis to arrive. Start preparing now. Start paying down debt now. Start building your emergency fund now. Start diversifying your investments now. Start thinking about your career now. Start thinking about your housing situation now. The more prepared you are before the crisis hits, the better off you're going to be when it does. Here's the bottom line. 2026 is going to be a difficult year. Rising oil prices are going to create a cascade of economic problems that are going to affect your life in ways you probably haven't considered. But if you understand what's coming and you prepare now, you can protect yourself and your family from the worst of it. You won't be able to prevent the crisis from happening. You won't be able to prevent inflation from rising or interest rates from spiking, but you can position yourself to weather the storm. You can make sure that you've got the financial flexibility to handle the challenges that are coming. And that's what really matters. The people who are going to struggle the most in 2026 are the ones who don't see it coming, or the ones who see it coming but don't do anything about it. Don't be that person. Start preparing now. That was your friend Clarence Capital. Don't forget, like this video and subscribe to the channel. Check out the next video, The Killer Job Scam, why you only get $4 for a $30 an hour wage. Take care of yourself, your finances, and most importantly, your time. Good luck.